Ladies and gentlemen, welcome back to Data Dispatch. I hope you guys have all had a wonderful and relaxing weekend. We're going to be talking about what to expect in the markets this week, especially since we had that jobs report that really hit the market hard in terms of selling pressure on Friday. The reaction to that could carry on into this week because now the probability of those interest rate cuts is really dwindling. And even though this is good that the economy is doing well, the markets don't like this. And we have some more important pieces of macroeconomic data that will be released this week. We're seeing the broader market that is selling off, Palantir included. We'll be covering that. And especially right now in the overnight hours on Robinhood, opening up with downward pressure that is continuing. With earnings coming up in a few short weeks here, we have some important pieces of information to cover, and with a Morningstar article that comes out about Palantir. So if you're a new or a returning viewer, we already hit 22,000 subscribers. We're growing fast. I can't thank you guys enough. Help me hit that journey to 23. Let's keep it going 1,000 at a time. Hit that like button, and of course, I'm not a financial advisor, collecting all the data and dispatching it to you. Now, if you see here right now on Robinhood's overnight hours, we see Palantir that's opening up about $1 less at 66.26 right now. Now, Palantir actually officially closed on Friday's market at 67.26. We can see opening up about another dollar shorter. Where Palantir does have at least a little bit of consolidation, some support, is basically right here at the 64 we've seen here. If this gets tested, Palantir did have some consolidation here up until the low 60s. You see here down here from $60 and consolidation kind of right here between the 61 and 62. The only concern for downward pressure is if we continue to see the sell-off across the market, Palantir does not have a ton of support or even trading time in recent history here in the 40s and 50s. This large gap after 40s was hit, accelerated right up to that $60 zone. That is where we could see a faster knife that continues to fall if we're continuing to see selling off in the market. Now, if we look at Morningstar, they came out here with this article talking about this massive rally. Is Palantir a stock to buy? Sell? Where are they sitting at? They're right now giving it a 1-star rating with a fair value estimate of $21. Now, that's incredibly low. I don't personally think Palantir is coming down to 21 right now in the near future, but they give it with a narrow economic moat and very high uncertainty rating. What this article basically talks about is just talking about it skyrocketing, going over 300%, one of the leaders in the S&P 500 for 2024, looking at its growth outlook right here, and they're talking about how does that tie into Palantir's valuation, why they give this $21 fair value trade, marking for an extremely high price to fair value estimate ratio. They say here of 3.6. They're talking about the growth expectations is really baked into the valuation. And it becomes apparent that the market is expecting sales to really keep accelerating and maintaining at this elevated growth rate for the foreseeable future. And that's what we've talked about before, is right now Palantir is really being priced for perfection. So nowhere near its fair value. We've seen the disconnection. It's becoming more of a connection right now, and we see a lot of these bigger news outlooks and articles that are starting to really highlight this, and I think this is starting to become more of a concern among institutional and retail investors. Now, of course, we're going to be talking about a lot of bearish articles coming out right now. Personally, I'm still a bull for Palantir in the long term. Nothing has changed with the fundamentals of the business. These are just more attractive prices for any potential investors that'd be looking at a more affordable entry point compared to $80. Now Palantir is in the mid 60s. So looking at Palantir coming down here, just because we're talking about it going down doesn't mean, hey, we're flipping the whole perspective or I'm going flipping back and forth. Some people in the comments mentioned that. No, I'm still a bull on Palantir in the long term. These are attractive prices as it does come down, and valuation is becoming more of the reality, and we're seeing this across the board. So risk and uncertainty right now, the risk for downside potential, I would agree with Morningstar, is at a very high uncertainty just due to some of the key risks that we have seeing potentially talking about the growth trajectory for Palantir. We know is doing well, but what the market has given it in terms of an expectation is astronomically high. And in order to trade at that valuation and continue to sustain those levels, a lot of people are starting to realize, hey, that this just must be and may be unsustainable. We see here a bar chart even comes up here at Palantir, talking about valuation as a concern. We know this. We've been talking about this as a valuation. Right now, Wall Street, the average price target is about $44, suggesting another downside potential of about 34%. So with earnings coming up here, estimated to be February 5th. We don't have the official announcement yet. We'll be coming to you guys, give you the update as soon as we know. But revenue estimate, 776 million. That correlates to earnings per share of 11 cents for earnings per share. With that, we also have a lot of controversy that we talked about before regarding will they make or miss their earnings. That's only going to come due time with what happens there. The bigger concern that I have right now, not just with Palantir, because we're seeing the sell-off that's actually, going across the market. We see on Friday, we see a very strong jobs report that is really casting doubt over the Fed's rate cut path. That's the main concern here. A very hot jobs report basically destroyed the expectations that we're going to see rate cuts, and a lot of them from the Federal Reserve this year, which is what the markets want. Traders right now are giving a 97% odds that the Fed is actually going to stand pat on rates in the meeting in January here, and they now think that the central bank will hold rates until they are in the March meeting as well. Odds of the March cut fell to around 25% following the jobs data, down from a 41% probability. So we see this rate cut from the Fed. The probability of that is dwindling. What's being affected the most are these growth stocks right here. Palantir, growth stock. That could be hurt if a spike in rates causes investors possibly to become more conservative in the markets. We see some of the big semiconductor chip stocks, even during the CES conference. NVIDIA coming down 3%, AMD and Broadcom about 2 to 5%, Palantir falling right here. Also, small caps not doing the best. We see IWM that is continuing to fall right here. Just a few short months ago, is trading at 244, now down at 216. So personally, sitting, watching the knife fall, waiting for that reversal in the market. I think that's what I'll personally be doing, because what to expect in the market this week is more pieces of macroeconomic data that is going to just bring more volatility. We're going to see a large amount of earnings reports that are actually coming from the big banks. You got JP Morgan, Goldman, Bank of America, Citigroup, Wells Fargo, and even more of them that are set to report their earnings, that is going to include some volatility. And we see Taiwan Semiconductor Manufacturing, TSM right here, and United Health also releasing their earnings. Big pieces of data that will be coming out Wednesday is going to be the Consumer Price Index for December. This is going to continue the gauge on inflation, which will even further and solidify the opinion and the probability of what's going to be occurring with interest rates regarding how the economy is doing and how inflation is doing. Consumer price index is going to give us more of an idea with how sticky inflation is, and if it continues to stay sticky or even increase, that's where we're going to see a decrease or possibly a pullback in the market due to the fact that we do have increasing prices. Also, we're going to see housing starts, building permits, some housing data that will be coming out along, like I said, with those big banks that will be reporting earnings. Some of the other stocks that we've seen pulling back here is NVIDIA, the boss of AI. We saw them take a big jab at quantum computing stocks. It also took a dive. So right now, like I said, NVIDIA popped up here to the 150, remember, during the CES, and basically comes back down here to the 135 in this consolidation phase. This is where we have a lot of uncertainty in the market. The Santa rally did not show up the beginning of the year. We're seeing to be a little rocky in terms of its prices and valuation across the board. So personally, I'm just going to be sitting on the sidelines, waiting to see if this comes down even more, waiting for that market flip, waiting for more indicators that could indicate that, hey, we're going to reverse into more buying pressure. Not saying, hey, the whole 2025 is going to be a bear market or anything like that. But right now, what we're just seeing is a lot of selling off, which may not necessarily be a horrible thing. Some of these stocks coming back to more of a realistic price in terms of valuation, in terms of their market cap. Palantir, market cap sits at about 153 billion right now, and still kind of sitting around that 66. So what's your guys' opinion on all this regarding the pullback in the markets here? You're going to be waiting for Palantir to come back even more forward, or do you think this is a decent buy the dip opportunity? Along with the broader market, you think we're going to continue to see sell-off across the market or a reversal in the near future? Peace out, take care, and I'll catch you guys later.